Welcome back to the Florida Steaming Group here in Chicago. Tuesday, August 2nd, D-Day. Not to be confused with the historic invasion on the Normandy beaches of D-Day, or to be confused with D-Day from Animal House. Today is D-Day as in the debt ceiling deadline, and we're seeing the vote currently going on right now. We're seeing a negative tone in the market. Ever since Obama on Sunday said we had an agreement, we saw that initial rally in the equities, and they crushed it yesterday, mostly due to the fact that the ISM number came out negative. They really saw some volatility. We had some great volume as well as volatility in the market yesterday. Hope you're able to capitalize on that. Currently right now we're seeing the S&P with a low of 1266. It broke that 200-day moving average. It was very, very important. Now we're seeing some back and fill underneath that on the chart. So we do have some room to run, and an old head and shoulders objective is down at 12 and a quarter. We're going to see what kind of data we got. Tomorrow we're looking at ADP. Obviously Friday we're looking at the more important non-farm payroll number. So folks, this could be a pretty wild week here. But I think with the Treasury market, it's kind of dictating, and I've been beating a dead horse with this, but as you know, if you've been listening to the killer here, there's been a great trade. The 10-year down into the 260s we saw today. They continue to grab these Treasuries. That insatiable thirst, which I have talked about from CNBC Fast Money to Fox Business to Bloomberg. I've been talking about this 10-year. It's been clearly leading this ever since April when it was at 3.75%. It's come down to full 100 basis points, folks. That's a huge move in such a short time. It's also been telling us about this soft patch and this fragility that's in the markets. Right now the 10-year high of 126.24 and a half, and the 30-year 129.24. We see that Eurozone stress come into the U.S. Treasury despite the fact we may get downgraded to AA, because at the end of the day, folks, I'd rather be owning USA paper than some of that Eurozone debt paper. It gets pretty sketchy over there in some of those countries with their current debt situations. And speaking of the euro currency, the low of 141.39, pretty tumultuous day yesterday in that trade. Overnight high of 142.71. But I think we're going to see, Dr. J has talked about where this euro currency is going. I think once we get past this debt ceiling and all the different dynamics we have here domestically, and we refocus on the European situation, Dr. J is right. This thing is going down into the 120s. So, check out Dr. J's website there at his blog and get some more information and some recon on the European situation. Crude oil, talked about that 94.83 situation. That's been the killer pivot. It was great yesterday. We came down to it, bounced, had a nice little pop, and then we got back under and made a new low. Currently the low is 93.75. So we're seeing that lock in step with the S&P. Let's look tomorrow to the ADP, but I think this vote today, we know the vote's going to happen today. I don't think it's the actual agreement that everyone was looking for, the clarity perspective in the market, but nonetheless, we got an agreement. All the drama, all the stuff, and all the action in DC finally got put to rest. So have a great day. Good luck trading. I think this week is really going to rock, so buckle that chin strap, folks. And one other thing, remember, be the hammer, not the nail.